Welcome to your daily stock market summary from MarketSnap. Hey everyone, it's great to have you back for another deep dive into the market action on this Tuesday, February 24th, 2026. We've got a packed day with plenty of ups and downs to unpack, from a rebound in major indexes to some massive moves in tech stocks, plus a slew of earnings and economic headlines shaping the landscape. Whether you're in for the long haul or keeping an eye on shorter-term swings, let's break it all down with a focus on building that wealth over time. Stick with me as we navigate today's trends and set you up for smarter investing decisions. First up, let's talk about the big picture. The market staged a solid recovery today after Monday's rough sell-off. The Dow Jones climbed nearly 0.8%, adding over 370 points, while the S&P 500 also rose about 0.8%, pushing past a key level. The Nasdaq led the charge with a 1% gain, fueled by a tech rebound, and the Russell 2000 wasn't far behind, up 1.2%. This bounce comes after fears around AI disruptions and tariff uncertainties rattled investors yesterday, but it seems like the market is shaking off some of that anxiety for now. For long-term investors, this kind of volatility is just noise. Focus on the broader trend, which still shows resilience in these indexes year to date. Zooming into individual movers, tech was the star of the show among large-cap gainers. AMD stole the spotlight with a massive jump of nearly 9%, boosted by a blockbuster AI infrastructure deal with Meta that could be worth billions over the coming years. Taiwan Semiconductor also powered ahead, up over 4%, riding the wave of AI chip demand. Intel wasn't far behind with a 5.7% gain, signaling a potential turnaround in sentiment for the chip giant. Even outside tech, names like Constellation Energy surged over 6%, showing strength in utilities. These moves highlight the ongoing AI tailwind, something long-term investors should keep on their radar as a secular growth driver. On the flip side, not everyone joined the party. Among large-cap losers, United Health Group slipped almost 3%, continuing to face pressure in the healthcare space. Texas Instruments also took a hit, down nearly 3%, as chip sector gains weren't universal. CVS Health dropped over 3.5%, reflecting ongoing challenges in retail pharmacy margins. These declines remind us that even in a rebound day, sector-specific headwinds can weigh on individual names. For long-term players, dips like these could be entry points if the fundamentals remain solid. Keep an eye on upcoming earnings for clarity. Looking at the market movers by trading activity, NVIDIA continues to dominate attention with high volume, even with a modest 0.7% gain today. AMD, as I mentioned, was a standout with both volume and price action, up nearly 9%. Intel also saw heavy trading with its 5.7% pop. These names underscore the market's obsession with AI and semiconductor plays right now. For long-term investors, this focus on tech isn't just a short-term fad, it's a structural shift worth positioning for, though diversification remains key to managing risk. Diving deeper into the most active stocks by volume, we see familiar faces like NVIDIA and AMD again, alongside Intel, showing how much investor interest is concentrated in tech. Smaller names like Immunity Bio also popped up with a 17.5% surge on heavy trading, hinting at speculative bets in biotech. High volume often signals momentum, but for long-term folks, it's a reminder to look beyond the hype and focus on sustainable growth stories. Now let's shift gears to earnings, as it's a busy week for reports. Today, we saw Home Depot beat earnings expectations despite a sales miss, with shares dipping slightly as housing affordability concerns linger. Keurig Dr. Pepper also topped estimates with a 10.5% sales jump, signaling strength in consumer staples. Looking ahead, tomorrow brings big names like NVIDIA, Salesforce, and Lowe's, which could set the tone for tech and retail sectors. Later in the week, keep an eye on Dell Technologies and HP Inc. for insights into hardware and AI demand. These reports are critical for gauging short-term sentiment, but for long-term investors, they're pieces of a bigger puzzle. Watch for guidance on 2026 to inform your strategy. You can find exclusive earnings transcript summaries on MarketSnap to dive deeper into these results and what they mean for your portfolio. On the news front, there's a lot to digest. Biotech is making waves with reports suggesting the sector could outperform in 2026, especially after a rebound started last year. Companies like Ver Biotechnology saw huge gains today on positive drug data and partnerships. Meanwhile, tariff uncertainty continues to loom large after the Supreme Court ruling against some of Trump's policies, though markets seem to be shrugging off his new 15% global levy for now. AI fears are also simmering, with a viral report from Citrini Research spooking investors about job displacement, though some analysts call it overblown. For long-term investors, these macro headlines are worth monitoring, but don't let them derail your focus. Stick to companies with strong fundamentals. Peaking at the top performers over the past week, Garmin led large-cap gainers with a whopping 21% surge, showing strength in consumer tech. Lumentum Holdings and AppLovin also posted double-digit gains, up around 15% each, fueled by sector momentum. These short-term pops can be tempting, but for long-term strategy, consider whether these gains are backed by durable growth or just market exuberance. Conversely, the past week's biggest losers included Genuine Parts, down over 20%, reflecting broader retail and auto parts struggles. Rivian also tanked 14% as EV concerns persist, and Blue Owl Capital dropped nearly 14% amid private credit worries. These declines highlight areas of caution, but for long-term investors, they could signal contrarian opportunities if the underlying businesses are sound. Wrapping up with sector performance over the week, industrials topped the list with a 2.1% gain, followed by consumer cyclical at 1.6%. Energy also shone, up over 4.6% on tariff-driven safe haven demand for commodities. These moves suggest defensive and cyclical plays are finding favor in the short term, but long-term investors should balance exposure across sectors to weather volatility. On the weaker side, healthcare lagged with a 0.6% drop over the week, alongside utilities and financials showing slight declines. These sectors are facing specific pressures, like cost inflation in healthcare, but they often offer stability for long-term portfolios. Don't write them off just yet. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and I hope this breakdown helps you navigate the market with confidence. Be sure to stay engaged with our daily summaries and dive into our exclusive SWOT analyses on MarketSnap to get deeper insights into the companies and trends shaping your investments. See you tomorrow for more actionable updates. Keep building that wealth.